Everybody likes free money, right? Well, if there's a correction in the stock market and it drops and you've got option trades on, there's an easy way to collect free money going forward month after month. Yeah, I'll take free money. Well, in this video, I'm going to show you a simple strategy to collect free money every month, month after month as the market comes back. And I'm going to go through several trades that we have on right now live on the option trading platform, and I'll show you exactly how to do it. The only thing that I ask is that you hit that like and subscribe button down below. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. It's a zero commission online platform brokerage. All right, guys, so we've recently had a big drop in the market just in the last week, and I'm going to go through three trades that we have on right now in three great stocks that I want to stay long on and put on the other side and collect free money until the market comes back, which it will. This is the Tastytrade option trading platform. It's a great brokerage, and there's a link down below, and you can get some free benefits. You can see this drop in Airbnb recently, way down. My target's much higher for Airbnb. IVR is 91, so it's high, so we can collect good premium. And the current price is 129. The trade that we have on right now is, you can see, we've got this short 145, 135 long put spread. So we're profitable above this about 140 because of the premium collected. We can actually go below our short strike. But we're only at 129, so we needed to move up this way. But remember that price, it's like 141 is the break even. So now what we're going to do, we're going to go to the table mode, and here's our short option, put option, and long. We're going to sell the same. We're going to go at the money because it's a 27 delta still. We're going to sell. We're going to click on the bid to sell the 145 call, and then we are going to go $10 wide just like we did on the put side on the call side, and we're going to collect $1.75. That's $175 that we're going to collect. We're going to go ahead and hit send. You can see the buying power effect. It actually increases our buying power. So it doesn't cost us anything. We've already got protection on the put side. We can't lose on both sides. So it doesn't cost us any extra money. If we go to the curve mode, now you can see we were at 141. Our break even comes down a little. It's not big, but it's 138, and we make more money. And if we pin it, if it comes back up to 145, we can make, you can see up here, $600. So we automatically collect $173. So we can't lose on both sides, and we've lowered our break even. So we're going to go ahead and hit send and place that trade. Looks like it did not go through yet, so I'm going to lower my replace order, lower this a little, couple pennies, just so we can place it. Normally I'll wait and just let it get filled. Wow, it's not filling. Let's go down a couple more so we can move on to the next one. We'll go down to 170 just to, but 170 bucks, why not? There, we collected it. It got filled at 170. So we're going to do the same thing with these others where we're long. AMD, my target is $200 for AMD. It's down to 131. It's had the big drop as well. It's going to come back. It's a great stock going forward. IVR is high again. We've got the 155, 135, so $20 wide on the put spread, and you can see right here our break even is about 145, and we're at 131. So what we're going to do, we're going to go to the table mode, and September, so I like to go about 45 days out, 30 to 45 days. We're going to sell the 155. We're going to go right at our short strike because this still gives us, you look at 21 delta, so that gives us, you subtract that from 1, gives us a 79% probability of profit. And you can see right here, this says 82 probability of profit, but that's a good probability of profit. They're still expecting it not to recover this far, so why not collect the free money? And look what we get for doing this. So if we're going to go 155, 175, we're going to go $20 wide as well. our buying power effect increases. So it doesn't cost us money. It actually gives us more money in our account uh, because the brokerage knows and the market knows we can't lose on both sides. So this is free money. We collect $192, $193 for putting this trade on. And we lower down to 142 our break-even price. So it doesn't have to come up as far. We just need, another $10 move up, which can easily happen. We just had this big drop, and we get this free money, and we're profitable all the way up to 167. So in order for it to whipsaw us, it would have to move way up. So why not collect the free 195 bucks while the market recovers? And I'll do this every month until it collected 193. We'll do this every month until the market recovers. But this is how you make your money back. The last one I'm going to show you is DraftKings. This is a leaps option. It's out 500 days, so over a year. If you have followed, you know we've done well in leaps options. You can see over the last 30 days in DraftKings, we've made $365. Over the last year, over $3,000 in DraftKings. And my target for DraftKings is way higher. It's like 50. I think it's going to continue to do well. So I do what's called a poor man's covered call. You can look at some of my past videos. And it's basically a leaps option like we have on right here. But then what I'll do is I'll sell the call against the leaps, and it doesn't cost any extra money. So you see the leaps option as the market goes up, just like owning the stock. It costs, a leaps option costs about half the amount of money to control 100 shares of stock as buying the stock. So it would cost $3,178 to buy 100 shares of DraftKings right now. It would cost about half that. I'll actually show you right here. It costs $960 for the 30 call option. I would typically go deeper in the money, but the market's moved down, so it's close to at the money now. But that will continue to make money. What we're going to do then is sell the shorter term 45-day September call option, and I want to collect over $1. There's 34 delta, so that gives us a 74% probability of profit. You can see right there, 74%. And we collect $123. It cost us nothing to do, and we go to, well, curve mode's not going to show us the profits. Well, actually it would. Let's see. If we lower that, yeah, it's not going to show it on this, but you see what we're doing. We're going to place that trade, $124. See if we get filled. Looks like we got filled. $124. So we just do this month after month, but we just lowered our cost basis and are collecting free money month after month. All right, that caps off today's video. Be sure and hit like and subscribe. Download the free options workshop, join Mumu, leave a comment, ask a question. I answer every one. Thanks for watching. I'll see you in the next video.